Good morning, everyone, and welcome to another edition of Bleeding Crypto's market update for X. Today is Friday, September 20th, 8:14 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. I am very excited to get this update, and I appreciate all the love and support, all the views, and I do apologize for going off the handle yesterday, guys. It gets frustrating sometimes when you're trying to, I'm giving all this information here on Twitter for free, and I get people, wanting to troll, and it just sometimes bothers me. But I'm going to start exercising the block button, like I have been in the past, and I think that really helps my overall emotions, so I don't have to deal with that, because I get a little riled up when I'm trying to help people and they are just taking offense to it. So rather than give them an audience, I am just going to block them and get them out of my life, and I don't have to worry about it. So I just wanted to just let you guys know. I'm going to be taking I took some requests today on X. I posted this morning that I was going to do this video, and so far AVAX has been the number one requested. So I'll look at AVAX, and then right before I start the request, I'll look over again, see what else is the second largest, most requested altcoin, and we'll tackle that as well. So let's go ahead and let's open up with the daily time frame here on what we've been talking about and what the next move is. What I anticipate the next move is based on the TA, not based on what I think, not based on feeling, nothing other than what the TA is showing us. The first thing I want to do is, guys, I want to clean this up a little bit. So I want to remove this here. This is not applicable. This was to our lower time frame. This was when we consolidated for 16 hours when we invalidated the lower high rule. We came down in the 4-hour time frame and we consolidated here for 16 hours before taking off. So we don't need this really on our chart anymore. The TA worked out perfectly. Consolidated right on 618, and we took off. So it did its job there. This one identified the lower high, the first lower high that we had on the bounce off of this low here. So that did its job as well. And so let me remove that. And right now, guys, yesterday we talked about this lower high rule, and I told you guys I am not allowed to remove this until this candle closes above 786, and look at what we did. We closed above 786. So now I'm allowed to remove this because we invalidated the lower high rule. It doesn't mean that we can't roll over, but in the way I view the market, if this is the top of this particular move, if it is, I'm going to consider this more closer to a double top than a lower high, because the lower high has a certain measurement that I like to stick to, and that's 618, 706, and no higher than a 786. So that's why I went ahead and removed that. So let's talk about where we're at, where we can go, and what we are doing. Yesterday, we came up right up against the 200 simple moving average. So let me just go back a little bit when we talked about this box. And I told you guys, I am creating this box as an area that I'm looking for a pivot. This box, the explanation for this box, the parameters for this box, better said, the lower part of the box was the 200 moving average, and the top portion of this box is the neckline of a previous double top that we had back in July as my resistance point. These are those double tops that I'm constantly pointing out, and I'm constantly playing. I'm constantly showing you the back test, the bear break back test, and how efficient and how reliable they are for setups. And then we also have, within that box, we have this magnet, these equal highs here that were formed in the last week of August that may get us to go up into the top of this box. However, we are having problems at the moment breaking above the 200 moving average. And I'm going to leave this. I'm just going to move this. I'm going to move this a little bit. Oh, excuse me. Nope. I want to take the bear path here, this little thing, and I want to move it out of the way. I'm going to move it over here to the left. It'll be out of our way. All right. This way we're able to view the price action a little bit better. But I want to leave this here because this hasn't been invalidated. So I want to make sure that as people join, as people follow me, as people are watching these videos, if you're the first time, you understand that this is the path that the market took when we analyzed it back here. We had two paths, a bull path and a bear path. And if you don't understand why I call this a bear path if we're going up, please view yesterday's video, which is Thursday, September 19th, to get that explanation. And then you can turn this one back on so you can catch up and you're back up to speed. So as of right now, guys, you can see that we are having trouble crossing. Does this mean that automatically we're going to go here? Absolutely not. Does this mean I was right? Absolutely not. And here's the thing, guys. It's not about being right or about being wrong. It's about what we are validating and what we are invalidating. So just because we are having resistance here at the bottom of this box, this does not constitute that now we're going down here. Because like with anything else, you have to be aware of what this move means here. Do you understand that we had a low, we had a high, we put in a higher low, we put in a higher high, we put in another a higher low, even though it wasn't off the continuation rule, it was off the consolidation rule. Nonetheless, it's still a higher low. And now we put in a higher high. On the daily time frame, this is an uptrend. Okay, this would be an uptrend on a lower time frame. The only difference is that on the daily time frame, it carries more weight. It's stronger. It means something. Now, let me do this because, again, this is not an educational, so I'm going to put away my indicators for now. Now, the next process of what I do is not saying, oh, yeah, there it is. There's a resistance. I'm going to go ahead and we're going to dump out and I was right. No, not at all. Because in order for me to be right, this needs to invalidate. This uptrend that we clearly have needs to invalidate, which means that we have to go through the entire process like we did on each one of these pushes. There was a sequence that we had to follow, and that sequence is still valid. So what the very first thing that I have to do is this. I'm going to grab my fib, and I'm going to go to this swing high. I'm going to go from this swing high to this swing low, and then I'm going to move this over. Okay. And I'm going to do one more thing, guys. I'm going to take this. Remember I told you guys about a signature move? This is a signature move so far. It's not confirmed, but remember what I told you about signature move? That you take the prior swing move, whether it's a swing high or swing low, the next candle, if there's a slight wick above it, that's a signature move. That's they also refer to as a swing failure or a sweep of the highs. That has a potential to become that. Now, this doesn't get confirmed until this current candle closes in 8 hours and 37 minutes. All of these little markers, guys, they all have validation points and they all have invalidation points. And you know what the commonality is? Time. You need to give these things time. Everyone expects for this to play out within an hour, within 2 hours. By next Thursday, we should be at all-time high. That's not the way the markets work. The markets are not in a hurry. Only you are. So in order to confirm this signature move, I need to wait for this to close in almost 9 hours. Then I can say, okay, we had a signature move. That starts to shift the probability that we may have a pivot in our hands. But I'm expecting a pivot on this uptrend. Hear what I said? For this uptrend to continue, I need a pivot. Now, watch this. I'm going to blow your mind even further. If we respect the higher low, we start to invalidate my markers down below. My $51,500 marker starts becoming weaker if we come down. And I'm sure I said those two phrases on purpose. And I'm sure you're confused, and I'm going to explain to you why. I'm going to explain to you why because I want you to understand that I don't have a bias on 51,500. I'm giving you a warning. I'm giving you a marker that I utilize in my system that has a 90% probability. I'm trying to make you aware of it, and some people are taking offense to it. I don't want to be a smart ass about it. And it's like I'm trying to help you for free, and yet you're coming back at me like I'm the bad guy. So I want to explain to you that though that is a target, this is a reality that we may invalidate that. Now, before I show you what I mean, I want also I'll give you the flip side of that. If we continue to get green candle after green candle after green candle, that is going to strengthen my target. Again, another confusing statement. And I'm going to start with that one. I'm going to explain that one and explain the other ones as I go down. If we continue to print green after green after green after green, there's a certain things that happen to the momentum indicators. They get cooked. They get overbought. They get too high. They get overextended. When they get overextended, and if they don't have a cool down period in between, they're more likely to have a hard drop, which is what we've seen in the past 6 months within this channel. So nothing changes. If we continue to go higher, it's going to strengthen my target. But if we come down here, if we push down into this area and we respect this area here, we strengthen the resolve of the bulls and we weaken the bears and we weaken my $51,500 target, because market structure matters. This is the higher low. We now put a higher high, and I'm not putting this as my top because this is a swing failure. So I don't typically. You can if you want to, and it's not going to make much of a difference. But I tend to just stick to the same rules I do every time I put a fib. I don't like putting at the very top if that was a swing failure. So I just look to the left. This was the end of the thrust. This is trying. It couldn't break above it. So I consider this a swing failure, and it was such a small little signature move here that, again, I'm just using it off of here. So I'm going off of the low. But this is what's incredible about technical analysis. This all looks so random, and it very, very, very rarely is. Everything is calculated. Everything is math-based. These are AIs that can think much faster than we can, that can already have 10 steps ahead of what we're trying to figure out what to do. They already know what's going to happen next Thursday. We have no clue what's going to happen tomorrow. Put it that way. All right, so let me explain this move to you. If we can come down and we can respect the continuation rule and put in a higher low, we have a good chance of getting to the top of this channel. That's the top of the channel that's been rejecting the price for 6 months. But let's talk about this first. Look at the way the 0.50 lines up to the bottom of the horizontal channel. That is, you have to take a moment to appreciate that, because so many things had to happen for the price to make it up to here so that this can line up this perfect. This is not a coincidence, guys. Not by a long shot. So keeping this here and respecting this chisels away the probability of my 51,500 target or lower, because we may go lower, like I've said many times, 51,500 to 48,700, let's call it, somewhere in that range. Why? Because not only does this establish a higher low, but look what it does. It holds above here, and then it's going to imply that we're going to have another bounce. Now, it doesn't mean that we're going to break through these. It just means we have. Think of a rubber band. You have a rubber band here, okay? You're holding it and you're pulling it back. It's gonna have a lot more strength to break through these resistance points rather than coming at it from an exhaustion point. It's already exhausted here. It's reaching the top of that, so it tends to reject a lot easier. But if it can cool down, regain its strength, on the next try, we may break through this prior high, invalidate this. Well, not invalidate, but just get above this high, and then start tackling those equal highs. Start tackling the resistance of that prior neckline that was established back in July, and get us into the top to hit here. Now, it's unlikely that we're going to break above here. Unlikely because of the strength, the 6-month data that we have on top of this here that has caused the price action to pivot every single time. Now, what I want to do here is, if we can manage to do that, you guys know how big of a harmonic pattern fan I am. So this is just, and this right here I'm going to show you, pure speculation. I just want this for my own little OCD. I just want to see what this would look like. If we hit the bottom there, wow, gets us right. Okay, perfect. All right, good. Doesn't mean all this means is that in this area here is what we should find exhaustion. And what a coincidence! It's no coincidence that that's the top of the channel, and that's the medium line of the horizontal channel, and that has again a lot of data showing how strong of a support and resistance we have in this line. As a matter of fact, let me show it to you. For those that are new, haven't been following me that long, let me show. I'm going to get rid of, just for now, I'm going to get rid of the diagonal channel, just so we have a little bit more of visibility. And let's follow this line. Let's see, is this line truly going to be an area of resistance? Let's look back and see how many times it caused a resistance and support within this line. So let's look at here. There it is right there. Look at that. Rejection, rejection, flipped it, confirmed, lost it, back test, came down, same thing. Look at that. Look at that. Okay, so let's go further back. Look at that. Rejection, rejection, support, 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 rejection, rejection. You see that? Resistance, resistance. Better said, not really rejection. We didn't really, well, we rejected a little bit, but resistance, resistance, support, support, resistance, support, resistance. Do you see that? Do you see the validity of that line? You see the validation? Every single time in the daily time frame, we come in here, look at the massive amount of trouble we're having. Look at the bearish patterns that this thing causes within this area here. So why would we want to think anything different? Could it invalidate? Yes, it can. But that's the key word. It needs to invalidate for us to think that it's going to be different. We can't just say it's going to be different because we feel like it. It has to prove it to us that it's going to be different than all the other times that it's hit here and it's caused a price action to come down. And it lines up perfectly with the harmonic pattern on the next impulse. So that's, again, that's just it's just another area of confluence that we can make a case for. I'm not married to 51,500. Fine, if you want to invalidate it, go ahead. But I need to build a reasonable case for it. And I'm trying to build a reasonable case to show my non-bias. Show it to me, and fine, it won't happen. So if that is the end of the harmonic pattern, the way I view the market is, okay, we're going to have a same repeat of this. Same repeat. Look, same area. Look, bottom, top of this channel, rejection. 6 months, rejection. So, and everything's lining up for another rejection. But that doesn't mean it can't invalidate it. That invalidation, like I've been talking about every single day, is a consolidation above here on the daily time frame. Get me above here and start trading higher, and that completely invalidates my markers below. That's the invalidation to it, if that happens. Now, I also talked about this, and today is Friday, so you have to be very, very careful today. Today can be a psyops operation, and we call it a scam pump weekend. And I explained it yesterday, and I'm going to explain it briefly today. It's artificial. Any moves that happen on a weekend are completely artificial. That's what we call them, a scam pump weekend. There's no volume to it. It's just the exchanges using the low volume, less resistance time frame to liquidate and trap people, liquidate all the shorts and trap people on the long for when New York comes up and says, okay, enough with your fuckery. We're going to go ahead and just get back to business. And what do they normally do when we have those type of weekends? They bring it all the way back down to where it started, and then the real move begins for that week. So The reason I'm bringing this to your attention is because many times you've heard me saying about this being an invalidation. So if we come up here during this weekend before New York 6:30 Eastern Standard Time, it does not invalidate my $51,500 target until New York says this is a real move. If New York confirms this by not dropping down and holding this, then it's a real move. So I just want to make sure that I'm 100% clear so that I could rebuke any type of smart ass comments that I'll get if we're up here and I'm still saying that it's not valid. So I want to make sure. All right. So for today, what are we looking for? It's real simple, guys. We're looking for this higher low. I want to see the bulls prove to me that they are in control of this move. I want to see the bulls come in here and say, okay, we're going to put a proper market structure. We're going to put in a higher low. And what if we invalidate it? What if we close below the 0.50? That mean that this is going to play out? Nope. As much as I am looking forward to this targeting hit, I still can't say that it's going to happen. Why? Because the rules are the rules. No matter what time frame, no matter what my bias is, no matter what I'm looking for something to happen, it's got to prove it to me. So if this gets invalidated, we have to put on our consolidation rule, the way we did prior when this happened here, when we came down here and we consolidated for 16 hours before moving up. But look what happens now. Look what happens. Look at the difference between the continuation rules and the consolidation rule. We're now below the bottom of the channel and below the purple line, which is the median line of the horizontal, a diagonal channel. So you see the difference? You see how one is like super bullish and one not so much. Because that now starts the fight all over again, that you got to break above this one and got to break above this one, and you got to back test it, and you got to get that momentum back up. So it loses that higher low momentum, because a higher low, even though it's dropping, it's super bullish. It's super bullish if you understand the dynamics of say, as simple as a rubber band, pulling that, getting that strength, boom, let's go up. Bringing that down here it shows more weakness. It shows, okay, now needs more time. But then when you do that, you don't want to fall below key areas of resistance. And if this gets invalidated, to me, that is then the continuing confirmation that this is going to get hit. But I'm willing to accept it if we're coming down here, we put in a higher low. Say this weekend we don't do much. Maybe we go up a percent or two like we did last weekend, but we don't really do much. We don't break above here. And then New York comes, hits here. Obviously, this is even if we hit here, it doesn't mean it's invalid. It just means that this is a strong area of resistance. We completed the harmonic pattern. We're going to have a little bit of a pullback, and we can still break above it here. Until we invalidate this and we start moving closer and closer, that's when this becomes more valid, and the invalidation of breaking higher becomes a reality. So there's always room for that invalidation. Now we have something else that we have to add to our equation, something major. In my opinion, it's major. Some people don't believe in this. Okay, I believe in it because it's historical data and it carries a lot of weight. Historically, September is not a good month. It's a red or a very low returning month. October, however, is the best month in crypto. Today, September 20th. We're running out of time to hit this target, in my opinion. We're running out of time. And many times I say there's no time frame when it comes. Not always, not usually, better said. But there are some times in the year that, to me, have an expiration time. The longer we stay here, and the closer we are to October, the less likely this is going to happen. And history shows us that. History shows us that, guys. It's not me saying, it's not my feeling, it's not my bias. History, You look back 14 years, you cannot look back 14 years and has a 90% probability and say, nope, nope, not this time. Nope, I don't want it to do that, so it has to go the other way. No, I can't. My markers, just the same markers I follow and that I play with, that I take setups on every day on different time frames, they are not always 100%. So it doesn't mean it's going to break you. And there are other factors involved that can contribute to that invalidation. And those factors, to me, seasonality, I follow that very, very religiously. And it happens to play, and it plays out more often than that. So then I have to start to then shift. The closer we get to October and the longer we stay here, that's less likely, because here's one thing that doesn't normally play out. In your mind, it plays out this way, but when you look back at the markets, it doesn't. You think that we're going to go hit here, come all the way here, and then spring up in 1 or 2 days. It doesn't work that way. It takes a lot more time. So it's less likely that we're going to be down here, that we're going to do this move in October, and then all of a sudden spring up, so that seasonality chart will be back in the positive. It's unlikely. Could it happen? Yes, it could happen, but it's less likely. And if it happens, great. But again, I have to be realistic, even with my own target, on when I have to say, you know what? Yeah, it's becoming less and less evident that that's going to happen. And we are approaching that when you look at the time clock. I believe there is a time clock. And I know you shouldn't have a time clock. And I get it. A lot of pro traders, a lot of people say, no, you can't put a time on it. I believe there are some instances that warrant that. And this is one of those instances that warrants me putting a time clock on it. So and I may be completely wrong. We may be October 15th and we may hit here. I can be completely wrong, but that's just how I'm viewing the market, and everybody views the market differently. As a matter of fact, a perfect example of viewing the market differently, I was on a Spaces yesterday, and there was a guest on there, a spider widow, something about spiders, some widow, something like that. Anyway, Black Widow or something like that. And she was saying that there's a cup and handle. There's a cup and handle on the weekly. And I'm looking at this. I'm like, man, I don't see any cup and handle. What the hell are you talking about? Oh, it's right there. It's clear. Just look at Investopedia. Look what a cup and handle looks like. I don't know. I've been trading for 7 years. I know exactly what a cup and handle looks like. I don't see a cup and handle. I didn't realize that she wasn't a day trader. She was a long-term investor, and it's all about perspective. You know, you look at this on the weekly time frame, and you're going to tell me that you see a cup and handle? I sure as hell don't. But you have to think, I'm a day trader. Day traders don't look at 4-year spans. So it's like, and look at this. This is a great perspective. I love this perspective. I was like, oh my God, this is amazing. And it goes to show you there's always something to learn in this space. Watch this, guys. This is this is amazing. Look at this. Look at this. Look at this cup. Look at this handle. Again, I'm not trying to fit my bull bias. And I didn't see this because I'm a day trader. No day trader is going to look at this, look at a 4-year span, you know. But it goes to show, if you have an open mind, if you listen to other perspective. Fuck, I was like, wow, this is freaking amazing. And for you guys that don't believe in these are powerful, powerful, powerful when they develop their incredibly powerful market structures. There's certain parameters, like these handles. These handles actually have the same rules as continuation rules. So the continuation rule, this handle typically should break out at a 382, but it should not be below a 0.50. If it goes below 0.50, it's pretty much an invalidated cup and handle. So, you know what? Let me grab another chart real quick, and let me measure that. That's one thing I didn't do yesterday. I should have done that. Let me see. Let me grab the index real quick. Let me grab the index. I want to see something here. I want to see if we have. Let me grab this. Let me just hide the indicators. I don't need the indicators. Let me grab this and put a continuation rule. And look at that. Holy, I can't make this shit up, guys. I cannot make this shit up. And I was not aware of this. You can go to the spaces that Wolf put on. Yes, you can hear the recording. You can hear me not arguing with her, but me telling her I don't see no cup and handle. So you can't say that I did this just to fit my bias, my bull bias. No, look at that, right into 382. This is a textbook, an absolute textbook. And the crazy thing about this, that you heard me say this yesterday, I am a bull because of this. This is a bull flag. But I wasn't looking at that cup and handle. I was talking about this is a bull flag. We should be breaking out of this very, very soon. And I'm talking about, that's why I said October and November, seasonality, that's when we're going to break out to new all-time highs. How high, I don't know. But we should be breaking out into new all-time highs in October and November. Based on all the data that we have, it's pointing to that. And now that I look at this cup and handle, and I look at the technicals, and it's hitting exactly, how can you ignore this? How can you ignore this? Give me 1 second, guys. I have to pause this. All right, sorry about that, guys. So I just wanted to show you guys why I believe that we do have a expiration to my target, though it could still play out. It's less likely to play out if we don't do this fairly soon. So we're in a very crucial time, in my opinion. Honestly, hold on, let me go here. So hopefully nobody has any questions on this. And just so you know, if you want to take a projection, and these are accurate, you don't have to believe it, but this is the way it works. Watch, let me show you this. You take this, actually the top here. You take that, and then you take this line here, here to the bottom here, bottom of this. Let me take the magnet off here, and you go here. All right, you measure the top there, top of that, and then you clone this. This is a very, very accurate reading of where the end of this move would be, right here, right inside of this area here, right there. We have about $123,000 out of the breakout of this here. There is something else that I want to use here. I need a magnet. Let me do my own thing real quick. Just give me 1 second. Oh wow. Okay. All right. Let me go back here into USDT, and let's go back to here, and let's go back to our drawings, and let's go back to our. I just wanted to show you that that was a real. I had not seen that at all whatsoever. So I got to give her credit that she was able to educate me. Show me something that I had not seen before, that to me fits my bull buy. I do have a bull bias. I just don't allow it to interfere with my day trading, because it's very dangerous and I can lose a lot of money that way. But I do have a bias to the upside. It's just that there are certain markers that I need to get resolved, certain inconsistencies that need to get resolved, that normally get resolved before a continuation. So, and that's all I'm saying when I talk about these targets here. All right, so let's go ahead, and I think I pretty much covered what I needed to see for this weekend. Where basically I need to see this. I need to see this coming here. Put this back. This is not invalidated. There we go. So we're either going to go do this on Monday. On Monday, I need to see actually today, not even Monday, today. Do we continue to push into this zone here, which becomes even more and more dangerous because we're overextended with no higher low? Or do we come down? Do we come down in here? So for today's, I don't want to call it assignment, but for today's lookout, I guess, is going to be this area here, this box here. From here to here, where do we fall? Where are we going inside of here? Are we pushing up higher, or are we finally coming down and putting in that proper market structure? I don't know. We will know together when it happens. I am leaving for the weekend. I'm going away for the weekend, for a nice weekend. So I don't know what my reception is going to be like or the time I'm going to have. I know my Discord and my Telegram will still be hearing from me because I do that 7 days a week. My Discord will have a market update tomorrow, and my Telegram will continue to we take trades 7 days a week, guys. So if you want to join my $25 a month channel, we take trades pretty much 7 days a week. And why 7 days a week? Because look, when you're a day trader, you live in a smaller time frame. In a smaller time frame, you tell me you can't find a trade off of this? You really tell me that there's not enough volatility? Really? Telling me that there's not enough volatility in a 5-minute time frame, then you don't know what you're doing. Put it that way. There's plenty of opportunities every single day. As a matter of fact, on my Discord, when I go live, that's the first thing I do. We took a trade today. We took a live trade today on a 5-minute time frame, and we made 5% ROI. Just like that. It was a 30-minute trade. A 30-minute trade, and boom, done. Any time of the day, anywhere we are, we can make a successful trade. It's just a matter of, do you have a system that allows you to do that? Look at my buddy Stefan. You see his posts. You guys, I'm always reposting his stuff. Look at the timestamps on his charts. They're 1 and 5 minute. And every single day he's posting and taking trades. Every single day. There's opportunity if you know what to look for. And his system is different than mine. He's got a great system. It's different than mine. But we're able to be successful. That's why there's 1,000 indicators. Everyone views the market differently. Not everyone's going to view the market the same. But can you find somebody that's consistently accurate? Not 100%, but 60% or more on viewing how the market moves. That's all I'm asking. Give me a 60%. Am I right 6 out of 10 times? Look at every single one of my videos and tell me, am I right 6 out of the 10 times? I'm not going to answer that. You tell me if you find an inconsistency to that. All right, guys, so let's look at, I'm going to go on Twitter. Let me go on Twitter here. And the number one so far, let me see if anything else came in. AVAX, I think it was AVAX. Yeah, AVAX was number one. So I'm going to see what else came in after that. We'll see what makes number two, the list on number two. And let me just look real quick here. Let's start with AVAX. Okay. All right, let's start with AVAX. Let's go into here and let me pull up AVAX. AVAX. All right, let's see what's up. What's up with AVAX? What are we doing with AVAX? The first thing I'm going to do is look at the weekly. Okay, good. I got my weekly on there. I want to see my indicator. Okay, my indicators are hid. All right, I don't need that for right now. I want to see what we have done. So we had a nice high. When was this? The last cycle, we put in a low. We had a nice move to the upside. I do want to see the... hold on, guys. All right, sorry about that, guys. I just had to take this call. So we had a nice little push to the downside, and a little push up. So I do want to see my indicators. I just want to see the momentum. Momentum does matter to me quite. Oh, wow, this looks great. Ooh, look at that W. Look at that higher low on the volume oscillator. That's looking really good. I really like that. What I want to see here is, let's see here. Let me look at the daily time frame. Okay, everything looks great on the, ooh, very nice. Wow. I can see why you asked for this. It's looking really good here. It's looking good. Okay, perfect. Strength is good. Strength is good. Momentum's still good. Volume's picking up the past couple of days. So basically, everybody, wants to know, okay, what's the next thing to look at? Okay, nothing changes on here. So you look at the daily time frame and you look at this move that it's done. It put in a low, it put in a high, it put in a higher low. So what you want to look for now is, did it respect the continuation rule? Yep, it candle body. We came down right into 0.50 and we bounced. See, came right into it. Boom, we bounced. So was the bounce? How do we know if the bounce is over with? a couple of things. I'm gonna look at the harmonic pattern, and I'm gonna look at overhead resistance, and I want to make sure, I want to see if there's a little bit more juice left. But looking at these two strong EMAs, the 300 and the 200 EMA, most likely this move is over, and now we're looking for a higher low. But just again, just for my own little quirkiness, my OCD, I just want to see something here. I just want to see how much of the harmonic pattern was honored. So let me see here, and all of it. Okay, cool. All right, perfect. All right, there, good. So now I know this was done. So now this increases the probability that we're going to look for a higher low now. This way we get that out of the way, and we start looking for those downside targets. So what I'm going to do here is here. It's going to go here. All right, perfect. We got that out of the way. So what I want to look for now is I want to go to the lower time frames. I'm going to go to the 4-hour time frame. What I want to see is I want to see the RSI start getting into the oversold territory. I want to see that this move is getting closer to reversing inside of this higher low, and I'm going to be able to capture that a little bit better in looking at the 4-hour time frame. I also want to look at the MACD. I want to see that the MACD is either halfway or almost at the volume oscillator for a full reset. That's going to allow me to see the next move to that upside. So let's look at here. Let's look at the 4-hour first. Okay, there it is. Okay, it still has a little bit more to go, and the mouth is open on here, meaning that we need a little bit more of a push here to hit that cross indicator and either pivot or maybe come down into here. But the fact that we're so close to this volume oscillator here, this hasn't been a really huge push. Usually the pushes are much higher than the volume oscillator. So this, again, kind of falls in line with that move to the upside. Now, the only thing that I have a little bit of reservation is looking at the RSI as high as it is. And you can see what's extreme overbought. So I'm going to now consider the possibility that we may go a little bit lower. And in order for me to build a case for that, I want to see, was there an area of strong resistance that this broke out of and never back tested? You guys know how much I rely on back tests. So back tests, along with other indicators to build a good case of confluence, allows me to get to look for a reasonable target. So the first thing we're going to do here, I don't need that anymore. Actually, one thing, I'm going to look at the hourly real quick. Okay, good. It's on its way there. Okay, perfect. Perfect. So that's good there. So I'm going to go here. And now I'm going to look for that prior resistance that did not, or an EMA that did not back test. So right here, 50 EMA resistance, blew through it. Perfect. So this point here is a strong area for me for a back test. So let me mark this off first here. And I'm going to put this in gold, because gold is usually the color that I use when I go into a position, whether it's a limit order or a long or a short. I identify it by a gold. So when I look at a chart real quick, I know that this is where my entry is, the gold position. So this is where my potential entry is going to be. So now what I want to do is I want to look to the left. Can the left show me prior support and resistance to give me confluence with the 50 EMA on the 4-hour time frame? Because we never back tested. There's a good chance we're going to go in here. So if that is the case, look at that. Look at that. Perfect. Perfect resistance. Look at that candle body support. Look at that candle. Look at this. Look at this beautiful touch of the support on this side. Let me go a little bit further, just to see. Just the more data I have, let me get rid of this hide indicators. Look at that. Clean. Like it. Love it. Okay, let me see over here. Beautiful. Going back to 20. Going back to the beginning. No, actually that's not beginning. That's August. Okay, good. It continues to. Beautiful. Nice. All right, great. All right, so now we're building a story. So that means that if I'm going to come down here, I'm going to invalidate the continuation rule. So I'm automatically going to invalidate this. So can I find confluence with the consolidation rule on that? I don't know. So let's see. Can this line up with, like, say, 706? 706 and 786 are my two favorite fibs. 706 being my favorite, but I don't know. Let's see. Yep, there it is right here. Here now we have confluence with the consolidation rule and our target based on the 50 EMA breakout, no back test, strong support and resistance, and confluence with the retracement fib for the consolidation. So now this becomes to build a story of where is a good place for me to take notice and take a position. Now, I don't like catching Pico bottoms. All right, I don't like catching those because they're often very dangerous. So what I would like to do is I wanna look at the behavior a little bit higher, a little bit above where I think it's gonna go for the next point of major resistance. So the first thing that comes to mind is this right here. I look at this peak and I think, I'm going to use the candle bodies just because I like candle bodies here. I'm going to use this candle bodies here as a potential. So what I'm going to do here, I'm going to actually put this on red for right now, and I want to find some valid points where this has been an area. Not too clean there. Pretty clean there. All right, pretty clean there. So, and that's kind of where the price action stopped before. So what I'm going to do here is I'm going to give myself a little bit of a warning. I'm going to look here, and if price action happens to stop here and doesn't break down but consolidate, I'm going to do this. Is that within the consolidation rule? The continuation rule, excuse me? Nope, that's still below it. So I'm going to go back. I'm going to put this on here. Reload right there. I'm gonna leave that there, and I'm going to wait and see if I'm not reaching here. I can start nibbling on here. I can start entering to starter positions in here, and as the market proves to me it's going to go higher, I can add. And I want to add fairly soon. I don't want to add over here because then it'll raise my average price up there, but I want to be able to catch it on spot, because remember, none of these drops, guys, never enter into a leverage position on a daily drop for a higher low. Never. That's how you get liquidated. These are for spot. Now, once I've established that either here or here I've entered into my spot positions and I'm starting to build lower time frame market structures for a continuation. So say, for instance, the safest area to enter into a leverage position is going to be this. And this is pure speculation. This is just a little quick learning lesson. You go here. Let's just say it goes here. All right? That's no problem. If that's where it's going to go, you wait for the bounce. Ignore the bounce. Don't get FOMO, because what you're going to do is you're going to look for the higher low off that bounce. That higher low is going to confirm that this was the bottom. That higher low on that bounce, that's where you enter your leverage position. That's where you go into your 3, 5x long positions. Not here, not here, not here, not here. Nowhere on a drop until you have an established trend. And even this is not guaranteed, but it has the probability on your side. Hopefully that helps you on Aave on what to, if that's what you're asking me for, on where to take a position. I'm assuming that's where you want to buy. So that's how I will handle it. Now it doesn't mean that you have to handle it this way. That's how I will handle it. All right, so let's look at. Let me look real quick here. What is the next? What is the highest? I'm not gonna go for these little shit going on with that. What is this? A hybrid bozo hybrid? I ain't touching that shit. I'm a day trader. I'm not a gambler. I'm not a high risk gambler, but I mean, trading is gambling in itself. But I'm not going to go in there for those little, no. Get the fuck out of here. Okay, Rose, CRV, TIA, AVAX. All right, I did that. NJ, DNT, AVAX, another AVAX, GRT, AVAX, Doge. Let's see, Doge. Rose. Here's another Rose. All right, DNT. All right. I like Rose. Rose is AI, so I'm gonna go with Rose. Okay, perfect. Let's go with Rose. Let's see here. ROSE, USDT. All right, let's see what we got. Let me start off by the weekly time frame. I've got to see. I got to look at price action for. I got to see what we did. Okay, so this was around last cycle. All right. It's very similar to AVAX. Found a bottom, had a nice little push. Look, almost the same market structure. We put in two higher highs, and then we broke down. This one broke down a little bit further down than AVAX, but breakdown nonetheless. So same thing. I'm going to turn my indicators on. I'm going to look at this. I like it. I like it. Okay, good, good, good. So now I can start thinking of overhead. Let me look at the chalk and money flow. Okay, not that great there, but let me look at the daily. Okay, all right, that's all right. Daily momentum. Let me look at the 4-hour momentum. Okay, perfect. So now what we're going to do is very similar. This is a very similar TA to what we covered AVAX. AVAX seems a little bit stronger though. Indicators, okay, it seems a little bit stronger. So the first thing I'm going to do here is see how we stopped again. Stop there. Same exact thing. I'm going to treat this the same thing. What did we do here on the daily time frame? We had a low, we had a high, we had a higher low. Was this higher low respected by the continuation rule? I don't know, so I'm going to find out. Here, yep, perfect. Okay, great. The harmonic. Was there a termination on that? Was a completion of that harmonic, or do we have a lot more to go? Okay, I feel like this is not close. I give myself a margin, but usually the margin is a little bit closer. This is a little bit further apart. So now what I'm going to do is I'm going to look for overhead resistance here that may trump completing this. So first thing I need to know is why did it stop there? Why there? So I'm going to grab this. I'm going to put this in yellow as a question. We're like, I don't know why. Let's see. Let's look to the left. Okay, we found resistance there. Okay, look, strong resistance there. Okay, it's making a little bit more sense. Let me just go back. There it is. Strong support, strong resistance. You see that? It never invalidates. It just gets stronger and stronger through time. Okay, that makes sense. But that still doesn't give me a reason why we can't go a little bit higher. Now, when we look up here for that completion, let me go over here. Look, okay, a little close bound. Look, candle bodies there, beautiful bounce off there. Great area support. Okay, so we still can make it up there. Now, what I want to look at is is there any major EMAs that may be like kind of we have with AVAX. We had the 200 EMA and the 300 EMA overhead on AVAX. I don't know about this one here. Let's see. Oh, look at that. Lines up our objective of completing the harmonic pattern lines up with the 100 EMA for confluence. So I would say this has probably a little bit more. Now, when I say that, you also always have to think about BTC. Okay, because though this tells me this has a little bit more steam before considering a higher low, if Bitcoin rolls over and does go down to $51,500 or $48,000 or $49,000, you know what's going to happen with this. This is going to roll over. Everything is going to roll over. As a matter of fact, I've told you this many times. You have to do a ratio of 3 to 1. So for every 1% that Bitcoin goes down, this is going to go down 3%. So let me show you the potential of this. Let me show you what that means as far as percentage-wise. Let's see here. Right here, here's a current price. If we go down to 51,500, that is 18.58%. So 18.58 times 3, 55% possibility that this thing may fall. So what does that put you at? From right here, 55%. Oof. That goes back to the bottom, guys. I mean, that's back to the bottom. I mean, you can do a 2 to 1. You can do a 2 to 1. If this has a higher enough market cap, I'm assuming this is I don't know. I'm going to say it's a shitcoin, but lower market cap coins do 3 to 1. So for instance, the ones that do 2 to 1 are going to be the higher. The ones that are like in the 1, 2, 3 or higher $1 billion market cap. So I guess I should find that out first. Let me see here. Just trying to speculate. Let me look. Let me look here real quick. If this is above a couple of billion, then yes. Then I can say, okay, we can expect a 2 to 1 would be reasonable. Let me see here. I think this is it. Yeah, Rose Oasis Network. I don't know what that is. Market cap. Yeah, no, 444 is not that big. So yeah, this can bleed pretty bad, and that's the risk you take with these as well. That's the risk you're going to take. So you got to understand that this thing can really, really bleed out. And get back to some of these lows that were previously. So let me show you what a 55.74% would be. Look, 55.74 is, and when right there, that's close enough. And then we're going to do this. I'm going to draw this as support, and then we're going to look left. And is there any confluence with that being an area of support? I don't know because I don't really follow this coin, but right, pretty much where it came out of the gate, right where it came out of the gate. So that's the risk you run. That's the and again, I'm not saying that's what's going to happen, but those are the things that you have to keep in mind. You just don't know what's going to happen. This may not even roll over. Maybe this announcement doesn't keep this thing just keeps on going. It could. But if you're asking me for the way I measure the market, the way I do my TA, those are the things that I look for. Because my number one concern is I don't want to lose. So get me in front of something that has a higher probability. Because I don't want to lose. So on this here, I would wait to see what Bitcoin does. Does Bitcoin push up to the upper area of the box or the upper channel, and you may get that completion. If that happens, then you're going to look for a higher low, like I mentioned before. So you're going to take this off of here for right now, and you're going to take this and let's say it does go up here. Again, we're just purely speculating. It goes up to here, completes the harmonic, then you put it down into this right here, and this is what you're looking for. You're looking for a rollover into this area here, possibly right here, possibly back to the 50 EMA on the daily time frame for a consolidation, and then your next move back to the upside and finally breaking this 100 EMA and possibly going to the 200 EMA on the daily time frame. So that's what we're looking for. But the most important thing that you want to ask yourself is, you're looking at this is, are you buying a top or are you buying a bottom? You're down here, guys. This is the top. If you believe in this project, I don't know what this project does. I think it's an AI project. But again, I don't care. I don't do fundamentals. I do strictly TA. I'm a day trader, so I just do technical. So if you believe it's going to go up here, are you buying a bottom? Well, I think I am. It looks like you are. I would be fine if I wanted to accumulate this for long term. Yeah, this looks like a really good bottom to me. All right, take it. All right, guys, everyone have a really good day. I'm going to end it here. You guys know what we're looking for on Bitcoin. Please consider joining my Telegram channel, guys. It's only $25 a month, and I get to tell you every single day I'm putting posts out there. We had a trade this morning, a really good trade this morning. We already secured, we're up 28%, and we've already secured 15%, 16% of that via a stop loss, so that we cannot lose no matter what. It'll hit our stop loss, and we're going to be up 16%, but we're already in the 28% ROI percentile. So, and that was just one trade this morning. Just one trade so far. So, if you want to get my my perspective on the markets, and you want to take my signals, it only costs you $25. Send me a DM, and I'll give you a link to my website so you can sign up for that service. And hopefully, I am hoping that with my track record in that $25 a month, that you graduate to my Discord channel, where I physically teach you every single one of my indicators, how to use them in conjunction, how to find the confluence, how to measure the potential moves to the upsides. Besides just using harmonic patterns, we use predictive fib counts to the upside that are highly, highly accurate. I show you guys all of that on my Discord on a daily basis. That costs more. That's $100 a month. But once you make the money on the Telegram channel, I'm sure that you'll have enough motivation that you're going to want to learn. Not everybody has that. Most people just want to be in here for the money. They don't care if you can make an extra couple bucks. All right, that's fine. Stay on Telegram, and that's what you're going to get. You're not going to get really no education. All right, guys, everyone have a really good day. Have a really good weekend. I will be back with you guys on Monday. I will not promise a video tomorrow on the weekend because I'm going away for the weekend, but I will get one for you on Monday. All right, that is almost for sure. Obviously, nothing's for sure, but I'm going to do my best for Monday. But until then, have a great weekend.